Hi, Jonathan York by Financial Partners, looking at investment markets. Getting down into the last week now before the US election. And it really does look pretty tight. It's going to come down to those sort of key swing states. Now, certainly what does look quite interesting out there is, appears to be the sort of Trump trade where certainly the 10-year is sort of picking up now, and that's closer to 430. Now, 3 weeks ago, that was trading around sort of 4%. And that's really on the back of the sort of policies that Trump is sort of promoting in terms of sort of tax cuts, etc. That is really going to leave a big hole in the deficit, is going to increase that deficit even further. And also as well, obviously on the tariffs, which is going to be inflationary for the US consumer. Just at the time when the Fed has sort of indicated that they're looking at cutting interest rates, and we'll be looking at cutting rates now for the next sort of 5 to 6 meetings. Also as well, we've got a pretty big week this week. You've got the big tech companies reporting, but also as well, you've got some key inflationary data as well. Just say those key US interest rates, 10-year is at 429 and the 2 years 413. I find it quite interesting that oil has backed up considerably. It was sort of trading sort of 72, 73 bucks and change. Currently trading around 67.50 and change. So that obviously has some pretty major implications for the global inflationary picture. Now in the UK, as they face a pretty tough budget, it's sort of quite interesting. The IMF has increased their GDP forecast for the UK up to 1.1% now. But say looking at it, it's going to be a pretty tough budget because there's a pretty big hole to fill in the public finances. But as well, with inflation under control, it's still looking for the Bank of England to be cutting interest rates at least once more this year, if not twice. Now, in the Eurozone, after the recent cut from the ECB, they came out and said, any further cuts will be data dependent. But looking at it with inflation under control and the economy is sort of a little bit sort of sluggish out there, you still expect potentially one further interest rate cut before year end. Now in Australia, quite interesting, consumer confidence is sort of creeping up again. It's at its highest level now since January 2023. Also as well, seeing a reasonable pickup in the housing market as well, especially in Brisbane and Perth. Now, if that increase in consumer confidence can sort of continue through into the early parts of the new year, potentially the RBA will be looking at cutting interest rates in February. And that will just give the economy a further little boost. Now here in New Zealand, really quite interesting, obviously after the recent cut from the RBNZ, potentially looking at now a 75 basis point cut at the meeting at the end of November. Because certainly the economy is sluggish, inflation is well under control. And many sort of economists and analysts now are sort of coming to the conclusion that although they haven't come out and said it publicly, the RBNZ now are sort of realizing that they did hold interest rates too high for too long and really need to get things moving on the downside. But also remember as well, the meeting at the end of November, the next meeting after that is not until mid-February 2025. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.